Kenya's Treasury has for the first time admitted that the country is at a high risk of external debt distress as the country's foreign currency obligations grow faster than its income from abroad. Eric Musau, head of research at the Standard Investment Bank, joined us earlier for a breakdown on this.
I think the issue of debt has been in the public domain for quite a considerable time. I think when you consider the position of Kenya, it's last year we had the debt ceiling raised, and that really talked to the very issue that we are discussing today. There is a sense that the situation is getting worse, and I think if you consider the events of the last few months with regards to the coronavirus situation, government has had to take various measures. On the revenue side, we've seen that taking a hit, and especially for the month of August, we've seen a 10% decline in revenue collected. We had, for example, VAT reduced from 16 to 14%, and the corporate tax also reduced. And this was really to shoulder the economy, which is struggling. So if you look at the debt situation, I think one has to consider the current scenario, but then of course balance it out with the possibility that it's not necessarily a new situation. Debt to GDP, the debt level has always been around 7 to 8%, and I think it's still within that level, but clearly a concern as we move forward.
Eric, let's look at the amount of debt service exports ratio, which is standing above that threshold that the International Monetary Fund talked about of 21%. Now, this definitely risks Kenya of being portrayed as junk status. Don't you think so?
Well, Kenyan debt has always been junk status. If you look at the ratings which have always been available. But I think if you consider the risks that the IMF has been raising, I think one has to concede that really all infrastructure projects cannot really be funded from government balance sheet. And there's need to diversify away the debt sources to the private sector, for example. And how do you incorporate toll roads? How do you incorporate other funding mechanisms for some of the infrastructure projects which are being considered? If you look at the export position, Kenya relative to other economies on the continent has been doing relatively well. If you look at the flower sector, the February is usually the peak season for the sector, and so the first half of the year was generally quite solid, and we are seeing a bit of recovery. Tea has done relatively well. We're seeing new crops, avocado, macadamia, which are really doing some heavy lifting if you look at the Kenyan numbers. Clearly, the transport sector, if you look at aviation, tourism has taken a big hit, and those could take a lot longer to recover. But I think the situation is really not as bad as many other economies. If you look at Africa, and even now we're still expecting GDP to be up about 2.5%. And if you compare it, for example, with South Africa or Nigeria, I mean, we're looking at a reasonably decent position. So I think despite the challenges that the economy is facing, it's generally well positioned. From an import perspective, oil demand also fell quite significantly.